Hello and welcome back. This is David from the Personal Finance Squad. We just finished up with Chapter 5, the grocery bill. We had 5 sections in there. A very lengthy chapter, but a very important chapter because it is the biggest cost in most budgets, or at least no more than third below on the top, and has the most variable expense on it. The whole point being is to keep more money in your pocket, and we saw Jasper's spreadsheet built out, and at this point you'll be building out yours as well to keep more money in your pocket by effective planning. So when we get into Chapter 6, FSAs, flexible spending accounts, this is exactly the same point, to keep more money in your pocket and with our budgeting here. So a flexible spending account is a vehicle that allows an employee to set aside a portion of earnings to pay for qualified expenses for very common medical and dependent care. So this is an employer option. And that means just because you have a job doesn't mean they're going to offer it. So I would say that in most corporations it's becoming pretty common. So hopefully you have that ability to do this to take advantage of what it provides. Generally speaking, when a new year begins, the employee determines an amount to be withdrawn from a paycheck. So when we say generally speaking, the new year it's their plan year. Oftentimes it'll be in January, but a company might have a fiscal year. And the fiscal year doesn't necessarily start in January, it'll start in some other month, but they still have a 12-month cycle. On the whole, most companies work off a plan year of January, and that means that their whole business runs off a year for taxes, for example, when they report earnings, things like that. Okay, so furthering this on, the employee determines how much it is, and it goes into that account to pay for bills, and which we always like to see here, as with like a 401k plan, or like a retirement plan, the money is pre-tax before federal and state, if you have a state tax, take money from your paycheck. So kind of like we talk about with a supplemental account, this money is deposited into a special account. So again, it's a side account that the employee gets reimbursed when a medical expense is incurred. So you'll be able to see how much money you have built up there, just like the separate online bank account and the supplemental account, meaning you can see the buildup of time of what you put in there if you want. But the whole point is you'll have a vehicle to look online to say this is how much money I have, and you'll be able to see where the money went when you apply money toward it. There's a little blurb on here. What we're saying here is that with today's timing in 2016, that most companies that have an FSA will provide you with a debit card of some sort that you can use as you would a Visa, and you use that to pay for those expenses. And then it automatically transacts into your online account, your supplemental, if you will, where you track all your money. So there are cases, though, where things will be paid for that'll be not with the FSA card. So if that's the case, you'll still be able to take your receipt and go through your employer some process that'll allow you to get reimbursed. So if I paid $100, let's say with my Visa, then I complete form, and then that $100 comes back to me. So again, as we always talk about, you see a wash. Okay, so let's get into about the basics of what an FSA does for you, how you can make it work for you as a benefit. So a great way to use it is for items that are not covered by health insurance when there's no coverage. It may be in this list down here, but generally speaking, you like a copay. So if you go to the doctor and every time you go, let's say it's $25, an FSA account can cover that $25. And then there's certainly elective medical expenses not covered by health. Let's go down here a little bit. And there's lots of those if you think about it. Insurance obviously does not cover everything, or they don't cover really full portions for most people. There's always going to be a need out there to have medical expenses covered. So let's just go through some items on here real quick. We can see that prescription medicines are very common, contact lenses or eyeglasses. Now some people may have a vision plan, but again, there might be a deductible, or let's say that you had let's say you get 2 pairs of glasses per year. and you happen to lose them on a trip. Well, then all of a sudden you need a new pair, and then you don't have coverage for that. So this would be another example of you being able to pay for them that way. We just talked about this a second ago, deductibles and co-payments. Non-elective cosmetic surgery. So that could cover lots of parts of the body. Braces are very common, right? Braces are expensive. Vasectomies if you don't want to have any more kids, or hysterectomies if you can't have any more kids, and certainly birth control if you're female, that you don't want kids at that point in time. Hospital service fees, you go to a hospital, you get a bill, and you can have all kinds of things on there, and you're trying to figure out where on earth that came from, right? I didn't even see that person do that work on me. Where's this charge? And long-term care services, that could be for the elderly, for example, or someone's disabled for a while, physical therapy, all kinds of things like that. Long-term care insurance, again, maybe it's not qualified. Yeah, nursing, laboratory fees, that could be processing your blood work at the doctor, and they pay a lab fee to get it done. Certainly alcohol abuse and treatment, like nicotine, drug addiction, all kinds of stuff that you might need side treatment for to battle with something that you need to work on for yourself, for your life choice. Dentures, hearing aids, crutches, wheelchairs, guide dogs, and you can see there's a whole host of things that you can apply money toward. We're going to stop at this point. We're going to get to the next sections about determining how to know what things that you should plan for based on this list. Because keep in mind, when you make this list and you can afford to put this money aside in your account, this means that you're going to have some tax benefit because you're getting pre-tax. So if you're going to pay for these items up here anyway, and you can at least know the ones that you can predict, then it's beneficial for you to participate in a plan like this. Okay, so thanks for joining, and we will see you in the next video.